so far. Our next guest says to focus on three key sectors: tech, financials, and industrials. Wealth Management Group Senior Portfolio Manager Ayako Yoshioka joins us now. She helps manage $75 billion in assets. Her firm, one of Barron's top 5 registered investment advisors in 2023. Ayako, thank you so much for joining us. Why are you focused on those three sectors?
Hi, Sarah. Thanks so much for having me. Tech obviously has just been a huge workhorse for the overall market. So that will continue to be a major focus as we go into earnings season. But, we've seen some strength out of the cyclical sectors, such as financials and industrials, and they've actually outperformed the overall S&P 500 year to date. So we would like to see that continue, and we're seeing the economic data come in a lot better and stronger. So we'd like to see that come through on the earnings for these cyclical companies as well.
Financials are interesting right now because we have seen this bear steepening of the yield curve, and that certainly hit the regional banks, the KRE, and financials broadly, although they've done better than in recent days in terms of market leadership. So what do you expect from here?
Absolutely. So, there's been a bifurcation between some of the larger cap names and the smaller regionals, and we continue to like the larger money center banks, such as JP Morgan. They continue to be high quality, and we're going to see some additional information in terms of overall financial conditions, activity, whether or not we're getting additional deal flow, trading. So we like those names in order to kind of get that feel for how the overall economy is doing.
We've been looking at some trends, for example, the Logistics Managers Index, which is really showing a ramp up and sort of encapsulates this notion that the economy is not just finding its footing, but actually accelerating a bit. Does that lead you to transports?
Absolutely. I think transports are also going to give us some sense for any sort of supply disruptions from the Baltimore Bridge collapse and, where transportation really has the bottlenecks and whether or not volumes are sort of keeping pace with some of the activity that we're seeing, and then whether or not pricing is going to be impacted as well. So we'd like to see a lot of this data come through from the individual companies during earnings season.
Does it matter to you as far as increasing exposure or decreasing exposure, whether we get a rate cut or 3 from the Fed this year?
As long as the economy and the economic data stays relatively strong and resilient, as we've seen in the last several months, and as long as, financial conditions aren't getting stressed, we're not too concerned about whether or not the Fed goes in June or, later on in the second half of this year. I think that the key positive for markets is that the Fed is no longer expecting to hike. It's just when are they going to cut and by how much. But I think everybody's leaning into the fact that the economy is strong and the Fed is going to eventually normalize interest rates sometime this year.
I know we hit financials, but industrials also are a focus of your funds. RTX, a name there. They've had so many issues with the turbofan, the engines. Why is that a stock that you like?
We continue to like it. It trades below a market multiple. It's a high quality name. It's had these issues in the past with the geared turbofan, but we continue to like the growth of the overall aerospace industry, and they've got a great defense segment as well. So we continue to like that balance for RTX, and we think it's a strong company for the long term.